9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man.
And I'm Avril Hong in Singapore. We're counting down to the open of markets in Greater China. Our top stories: Asian stocks fall as mounting inflation concerns extend a global bond sell-off. 30-year Treasury steadying after yields hit the highest since 2007. Elevated energy costs fanning those inflation worries, with Brent crude holding above $110 a barrel as President Trump threatens new strikes on Iran within days. Also ahead, energy projects in focus as Russian President Vladimir Putin meets today with Xi Jinping in Beijing.
And I'm Paul Allen in Adelaide, where energy producers are gathered to discuss the industry's future as they navigate disruptions from the Middle East conflict. Stay with us for our exclusive interview with Liz Westcott, Woodside CEO and Managing Director.
Good morning. We are kicking off the show today with some breaking news when it comes to the LPR. So the 1 year as well as the 5-year loan prime rates remain unchanged at 3.5% for the 5. 1 year is at 3%. So no surprises here. But this is on the backdrop what we saw just a few days ago. That data dump in April was a pretty soft one. So there are more growing calls now from economists that we might need to see more stimulus in the pipeline to deal, of course, with some of the impacts and fallout from this whole Iran war, Avril. So certainly one thing to watch here. We're still checking bond markets here as we count down to, of course, the big one, Nvidia earnings later on.
Yeah, you talk about the Iran war. Trump's been talking about how Iran really wants a deal. We've been seeing Brent prices hovering near the 110 handle. Take a look at how markets are faring as well, because we've been really focusing on the bond markets, and it's the uncertainty of the short and the long end outcomes and how the standoff in the Middle East is affecting all of this. We, of course, have been seeing the 30-year yield earlier hitting the highest levels we've seen it during 2007. And there is a bit of steadying for the moment. Of course, if you take a look at the Fed pricing, markets are now pricing fully a hike by the end of the year, at the time where Asia stocks are tracking the losses on Wall Street. Chip stocks were flat overnight, but it was a kind of late session sort of rebound. We are still looking at the Nikkei in negative territory. I think this is the 5th session of losses, despite earnings having delivered in Japan. You're also seeing how emerging markets are really bearing the brunt of these higher yields and a resurgent greenback. As far as the Japanese markets are concerned, don't forget we have a 20-year auction for JGBs later today. Katayama has been talking about really, stepping in if needed on bold action on the weak yen. Take a look as well how we're setting up for China. What was interesting yesterday was, as Asia markets came under a lot of pressure, the Chinese stocks kind of stood out. So I think the haven narrative is resurfacing somewhat. Today you're seeing those futures pointing down, though. Dollar China is headed at the 682 handle against a backdrop of a resurgent greenback. Yvonne?
Yep. All right. Let's bring in our markets reporter, Anthony Stevens, for more, of course, on this bond rout, impact on equities and the like. This bond sell-off, when you're talking about the 30-year yield in the U.S. now punching well above 510, or I think closer to 520 levels here right now. What does it tell you about where to go next?
Right, bonds are supposed to be boring, right? And that is not happening here. So that's caused a huge cut in positions last night. So there was a little bit of positioning panic in treasuries last night. So you saw $15 billion worth of block trades. That led to treasury volumes that are about 3 times normal, right? So it's not that the yields are moving. It's that the panic on the speed and the scale of the moves that are starting to concern fixed income investors. Treasury volatility is up 20% in 2 days.
And there wasn't really a clear catalyst either that led to this.
Not really, but it's the fact that this situation is dragging out for so long, right? So the probability that the Straits of Hormuz will be open by the end of June are now at the lowest they've been since the conflict started. So it's at around 30%. Even though a chance of a peace deal with Iran is still at around 70% in December. So this is pricing now to go on for quite a long time. And more importantly than that, policy action seems to be lagging, right? The RBA stands out as the only proactive major central bank that said something about doing, getting in front of inflation, right? Everybody else is kind of in wait and see mode. And you are seeing that in the rates curve, right? There's nothing priced in terms of action for the next 2 Fed meetings. So the bond market is really concerned about when policymakers will pivot on this topic.
Is there going to be a lid on yields then, given all this uncertainty, Anthony?
Yeah, I think it's interesting that there's been quite a decent amount of demand based on the kind of tenor and the absolute yield rate, right? You're seeing that in auctions that are doing okay, even though today's 20-year auction in Japan is kind of an unpopular tenor, is probably not going to do as well. But there is demand at these high interest rates, but you are starting to see a bit of disconcerted price action, right? You can't keep not doing anything about inflation and expect bond buyers to keep reloading.
What about the price action you're seeing in Asia today? I mean, there's a lot of vol, I think, in South Korea.
Yeah, so intraday volatility has become a much bigger thing as retail is doing battle with global macro accounts, right? So you had Citadel Securities put out a super interesting strategy note on the 18th talking about how elevated retail options volumes are. They're 2.8 times in May, normal month, and we have 2 more weeks left in May. That's a record that's 25% higher than the previous record month. So retail is really all in, right? And they are willing to buy every dip. That is driving this intraday volatility. You had Korea open up on the day, then plunged to down 3, and now we're down 2. That's going to go on for quite a while until we get this Nvidia earnings out of the way and we get a clear picture.
Yeah, and speaking of Nvidia earnings, can they still surprise given quarters of exceptional growth, and yet it doesn't really appease the markets still?
And the surprise doesn't appease the markets either, right? Even if they do surprise, they've had a fade, a kind of a pattern of fading, right? Since they hit that June 2024 benchmark as the world's most valuable company, the overweight is so high that the bar to materially move the needle there keeps getting higher, right? And that's something I want to kind of highlight in terms of equity markets in general. Momentum is a much bigger factor. So yesterday, amidst the sell-off, of all things, you saw India's IT sector up 3, right? So the underweights now could rally. And for China, that's relevant because the K-Web is a very big underweight.
Okay, Anthony, thank you. Anthony Stevens there with what to watch out for in markets here today. Coming up on the China Show, we'll be speaking exclusively with Hesai's CEO after the company was selected to become a LiDAR partner and supplier for Mercedes-Benz. More with David Lee coming up next. And we are counting down to the open of trade in Shanghai, Shenzhen, and Hong Kong. Futures are pointing negative this morning. We're down about 0.5%. This is the China Show. All right, we're taking when it comes to futures here this morning, a little bit on the back foot as we, of course, look at all things considered here. This bond sell-off that continues when you have the long end of the Treasury curve at the highest level since 2007. Certainly that does send some worries across the equity space once again. CGBs, though, are still quite resilient in the face of all that, but dollar is in some ways still firming a little bit. We're still talking about 682, 681 levels for dollar China right now. But yes, gives us time, able to really talk about earnings this morning as well.
Yeah, and the one company that's in focus, Chinese LiDAR maker Hesai, it's reported 30% on-year revenue growth for the first quarter. The company's also just announced a strategic partnership with Mercedes-Benz. ADRs, though, down overnight. Let's get more on the earnings and outlook with David Lee, co-founder and CEO, joining us exclusively today from Shanghai. David, great to see you. So congratulations on the tie-up with Mercedes. But I think what investors want to know more about is, profit margin, how that fell in the first quarter. What is the plan to sort of perhaps slow that trend? How are you looking to reverse that?
Well, definitely. Well, first of all, thank you for having me. I think the bigger picture is growth. We should probably start from the ADAS market. The latest number in March, the main LiDAR market share were 55% in China. And we're growing tremendously. And also, I think one of the most exciting things to me is that, people always talk about the declining of the price. And for each LiDAR, that's usually the case. But what's interesting is that we're seeing the number of LiDARs coming back up. Used to be one. Now with the latest launch of Li Auto's flagship models, we're actually going from one LiDAR to 4 LiDARs. So we're increasing a lot of LiDAR content per vehicle, and which shows that we're finally seeing people appreciating more LiDARs are providing more safety, more functions, and more car companies are looking to do that, essentially reversing the trend of the total cost of LiDAR on a vehicle to go back to a much higher level, which is great news for us. Of course, we're also announcing more new car models with players like Toyota GAC and Cadillac China, Audi, Li Auto, Xiaomi, Geely, etc. The car market alone is becoming more interesting because of the information I mentioned.
Yeah, car market, but also I guess robotics market, which I guess we can talk about in a bit. But there's also increasing competition within the LiDAR sector, right? You're seeing some of these rivals with technological breakthroughs. How are you looking at the landscape now? Yeah,
well, the competition has always been there and has always been strong. But again, if you look at the number, we are 55% in the month of March for the main LiDAR in China, which means that the gap is actually widening. And also, we're not stopping there. We're releasing more new cutting-edge technologies. One of the coolest things we recently released is called Picasso, like the artist. What it does is that it's actually very interesting. Traditionally, people combine LiDARs with cameras in a package. So it's usually bulky or you distribute them. But anyhow, it's 2 separate devices. Today, we use a very interesting strategy. Let's call that buy one, get one for free. So we build a 6D LiDAR. So essentially, it's a 3D LiDAR where it has the function of camera at the same time. So it's really the XYZ for the LiDAR and the RGB for the camera in one device. It's not even combining. It has the camera function by the pixel level because our new generations of semiconductor is leading the world on the front, and it's allowing us to do this for the first time for the world. So now I somehow feel like maybe we can end the camera LiDAR debate.
Okay, we can end that debate, David. Tell to me about Cosmo then. What is the business model around Cosmo? We are talking about you're moving away from just spatial perception to now spatial intelligence and really entering into the physical AI world.
Definitely. Yeah. Cosmo is a completely different category, right? The Picasso is the next level of game for the LiDAR business, really, even though we incorporate the camera. Essentially, it's a LiDAR with camera functions. Cosmo is a new effort we make alongside the LiDAR business. It's part of our new effort called Strategic Growth Initiative, SGI. What it does is that it allows us to leverage what we have to industries that's outside automotive. If you think about it, what we do as a Hesai, best as a champion, is we build the sensors to perceive the world for robots and as an AI infrastructure builder. What we can leverage our strengths from LiDAR is to capture and digitalize the entire 3D world for other applications. Cosmo is such a hardware-enabled data infrastructure to digitize, reconstruct the 3D world. If you think about it, that's actually the key for any AI. For digital AI, you always had the data to begin with. For the physical AI, the data is the fuel, like the gasoline. For physical AI, to train their models, arguably, it's more important than memories and electricity in this industry. However, we lack that. Today, all the data we have to train the physical AI robots are in 2D. We didn't really have rich 3D content because there was never such a great hardware and the platform to do that. And we're the first one to be able to do that, to train all the robotics models with high fidelity image and the 3D point cloud and all the sensors in one bundle. And that's what we're able to provide. And for the SGI entire unit, we're expecting more than 100 million RMB this year of revenue with some of the early orders already. and more than 500 million RMB order in 2027.
David, I think the market was a bit disappointed. I mean, the 9% drop in the ADRs after this earnings came out, we hit the sort of the margin sort of concerns. There's also the prospect of smaller than expected improvement when it comes to your profitability as well. How do you address those concerns now to the market?
I think, again, two parts, right? One is that our margin is still by far the leader among our peers due to our core strengths. And I think people should take a closer look at that. Obviously, the other reason is that we're expanding our volume dramatically. This is the period where you need to see some trade-offs between ASP and margin. But if you think about it, the way it works is that there always generations of new technologies come in to make it better and cheaper. And you have to look for the pace to do that. And we're very, very aggressively pushing the new technologies to be able to achieve that. Of course, I think to us, the most exciting thing is, other than the car business, we already see the new initiative like the SGI with new exciting products that's beyond even hardware sales. It's a new business model that allows us to grow much more rapidly.
And as far as robotics or humanoids, there's so much interest in that sector. Do you see that as a growth engine? What's the trajectory that you're expecting on that front?
Yeah, that's also another exciting category, which is I consider that as the extrapolation of the car LiDAR industry, because essentially it was the capability we built in building car LiDARs and at the quality and the quantity and the price. And we leverage that to serve the robotics, especially now the humanoid robots industry with people like Unitree, like Honor, and those people are the leaders for humanoid. And even like Unitree, they show their great robot on the Chunwan, the Gala, and then it was our sensor. And what's another interesting example I like to mention, which is super eye-opening, is that the first time ever somebody as a global leader for smart two-wheelers, the scooter, Xiaoniu, they use our fully solid-state sensors to build their autonomous moving two-wheelers. Which obviously is a much smaller market than cars, but it just gives you the sense of the possibility we're opening up when we are producing car LiDARs at a larger volume. So many more industries are able to tap into such a product for the first time and explore the applications that we couldn't even think of in the past.
David, I got to turn from two-wheelers to four-wheelers, right? This announcement you made with being the supplier to Mercedes-Benz. We've talked about it before. You always give us little nuggets on the show. Last time it was about your Thailand production and your facility there. Last time was Nvidia and your secret girlfriend that you hard launched. Mercedes now being the next hard launch here. How does this fit into your global expansion plans now?
It's extremely important. First of all, I think it's probably another supermodel we finally get to announce. And the official statement is that we're a strategic LiDAR partner and a confirmed supplier for Mercedes-Benz models, enabling level 3 autonomy, which is very important. And of course, we're also telling people that finally the link between the deals we have and the Galileo manufacturing center in Thailand we built, which is starting to operate in early 2027, which is coming very soon. And of course, we hope there will be more information we could announce, but today we have to stay strictly to what we are allowed to communicate based off the communication with the customer.
So
at this point, you can't tell us in terms of. Oh, go ahead. Go ahead.
So with the Thai factory, it's going according to progress. Are we likely to see that in the first month of 2027?
Yeah, it's coming along.
And talk to us as well about. Go ahead, David.
Sorry, yeah, I think the interesting thing probably we should ask is that, well, if we've been secretly dating for a long time, why are we announcing the Mercedes deal now, right? Since considering that obviously it's been ongoing for a while. This is my interpretation. we live in a very interesting industry, the LiDAR industry. And a lot of people half-jokingly say that, a lot of the deals, when you sign that, it doesn't necessarily mean that you will go to production because it's a difficult industry with so many challenges. I understand that. And the customer hold a very high bar now in acknowledging an official partner in public. And we understand that because they don't want to prematurely do that. But now we have achieved that. I think that's one of the biggest reasons that the customers feel confident enough that we're making this public together. Of course, this should be the most important piece of information from this should be that this deal is going to go to production with very high certainty, and we're expecting many models coming out of this platform.
How much will this account for production overall? What's the ratio going to look like coming out of the Thai factory? And how are you thinking about supply chains overall as well?
Yeah, I don't have a specific number today to disclose based on the contract, and we're going to have to wait for the customers to do. What I do want to say that this is definitely the beginning of opening doors for different car models for not even one brand, but it makes it easier for other people to tag along the process that we build in Thailand with Nvidia in building such an automotive grade product that we can ship globally. You can imagine there is a lot of groundwork we did to make it happen so that it meets the compliance requirements for really different continents. So that's why the first one is always the most difficult one, but the rest of the deals are going to be much easier.
David, great to have you. Always enjoy the conversation. David Lee there, co-founder and CEO of Hesai Technologies, increasingly surrounding himself with more supermodels. When it comes to the free market here, we did see those Hesai shares in Hong Kong are falling, similar to what we saw in the ADRs, down some 8% or so. Hang Seng is lower also by about a third of 1%. And we're talking still about a 682 handle for dollar China. This is Bloomberg. Your agenda for Greater China today, of course, is Putin and Xi meeting in Beijing. And of course, a lot of talks about deals when it comes to that Power of Siberia pipeline. And certainly the focus is going to be on energy flows as well. There has been that slump in the Chinex here. And, we're watching, of course, Bilibili earnings. The Sohn conference is underway as well. And our very own David Ingles is on the ground there here in Hong Kong this morning. And a CGB sale coming up later on as well, Avril.
Yep. We're also watching out for the JGB auction, right, out of Japan, the 20-year this afternoon, those results. Let's take a look at how pre-markets are faring, looking at a down day so far, tracking what we're seeing in the broader region. Welcome back. You're watching The China Show. We're counting down to the open of markets, and we're looking like another down day, tracking what we're seeing in the rest of the region against the backdrop of overall elevated yields, particularly on the long end globally, and against the backdrop of the bounce, the surge we've been seeing in the greenback. Those Middle East concerns, I suppose, still weighing on markets, Yvonne.
Yeah, it is still about inflation, really, Avril. And, there wasn't really any clear catalyst, but you still saw that U.S. 30-year yield is punching close to 520 levels here. That's the highest we've seen since 2007. As you mentioned, too, traders are now pricing in a possibility of a rate hike as early as year end. So you are seeing those rate hike expectations are coming out and readjusting here this morning. And that certainly is roiling in some extent here the risk assets story here and the AI trade. But But Nvidia, is that likely going to change the tune here? That certainly is going to be the key focus coming up in the next few hours or so. In the meantime, onshore markets look like this. We're slightly lower when it comes to a CSI 300, just 0.5%. So very different from what we're seeing in other regional benchmarks like the Kospi, which continues to be quite painting a grim picture there this morning. Shanghai crude is a little bit elevated as well. You also have the likes of chips that are falling here. So Cameron Tech is down 0.7%. The consumption space as well, like Medea, is not doing too well. So, there's not too much in terms of conviction here this morning. And the Chinex, as we say, is extending that sort of sell-off that we saw. They were down about just a marginal 1%. So certainly that's one thing that's going on. Let's see how Hong Kong is faring. Still some earnings to tell you about. We talked about to Hesai's David Lee earlier. Billy earnings also came on. We're still seeing some downside in Hang Seng, although, as I mentioned, it's been pretty moderate in terms of declines. HS Tech also on offer here today, but you're still seeing some green amongst some of the Tencents, Alibabas, and Meituans, which is interesting, right? Just given that they have been the laggards of late. Maybe this rotation is now benefiting some of these internet platforms once again. Although we are still seeing Baidu is down some 1%. Xiaomi is also down by 0.9%. But the boards, we talked about the earnings side of things. Billy is sort of the interesting one. The ADRs did actually gain in the U.S. It was in terms of the expectations. They did actually were pretty good in terms of advertising revenue, right? Which you rarely hear, according to Morgan Stanley, among some of these Chinese internet companies, where advertising revenue growth was stronger than expected. Nevertheless, the stock is still down close to 4%. ZTO Express also came up with those earnings, but yeah, missing estimates there. Maybe that's why the stock is a bit heavy here this morning. And then of course, there's Hesai. So it's interesting, right? It was kind of a mixed bag when it came to the number of shipments, when it came to higher revenue. Those were all pretty strong. But then again, I think investors are still quite concerned about weaker gross margins. Also, when it came to the improvement in profitability, might have missed a little bit there as well. But as David Lee told us, right, you got to talk a little bit more about how they're broadening beyond just the EV space now to humanoid robots, automation, the like here. And of course, announcing that big partnership to be a supplier for Mercedes-Benz, Avril.
Yeah, because we've been seeing how investors, amid the AI rally, have been looking for some of these fresh trades, including on robotics, humanoid-related stocks. It's interesting on the Chinex today, you're seeing some of the declines coming from the likes of CATL, for example. And I think this is really speaking to that rethink we've been seeing overall on that so-called AI trade. And of course, we've been focusing on Nvidia. It'll give that much-anticipated update on the state of the AI economy when it reports first quarter results later Wednesday. As Bloomberg tech co-anchor Ed Ludlow reports, the Chinese market continues to cloud the outlook for the world's most valuable company.
There's massive beat and raise expectations for Nvidia. The market really believes the momentum continues. Top line growth 80%, bottom line growth 84%, but China is still the overhang for Jensen Huang and his company. Post the trip to China with the president, there wasn't really a net conclusion. Jensen Huang projected confidence when I was able to ask him about it just before earnings, but the reality is it's still up to China.
The Chinese government has to decide how much of their local market do they want to protect and how much of their local market do they want to expand with more AI capacity. My sense is that the demand in China is so incredible. Just like it is here, agentic AI is also making enormous progress there. My sense is that over time, the market will open.
The environment is really clear. Demand is outpacing supply, and that manifests itself still in memory chips. Jensen Huang talking about the idea that the supply chain is doubling, maybe even quadrupling per annum. But it's over the next decade that we're still going to see that mismatch. And so that is the question that markets will pose. Where is the continued growth momentum coming from in the face of supply constraints? And also, what is really going on with China? Because right now, the base case assumption is that China is zero revenues. It's definitely a market that Jensen Huang and Nvidia want to be in. Ed Ludlow for Bloomberg News in San Francisco.
And you know, when it comes to Nvidia post-earnings, it's really a familiar dance that we're seeing, right? Because after the earnings drop, the stock tends to face a bit of selling pressure, and then you see a bit of that wavering when it comes to the rest of the tech complex. And it'll be interesting to see whether this is what we'll see this time around. And there you have that chart as well, just a reminder of some of the post-earnings performance on the stock. We have, of course, been seeing maybe this time around is a bit different because of how hard the rally has been on Nvidia. I think we're still 30% up since the lows of March. Yvonne, it's interesting, of course, how the segments, as far as revenues are concerned, are going to be broken down as well.
Yeah, as you see from the post-earnings slips, right? Even good earnings is just maybe a guide to traders and the like to profit, take some profits. If it's great, maybe that does help fuel this AI rally. But again, we've seen a lot when it comes to headwinds across the semiconductor space of late, and the sell-off has been quite relentless on the way down as well. In terms of segment revenue, this is kind of what we're looking at for the first quarter as well when it comes to compute, networking, gaming, and the like. And it really comes down to what we hear about China, right? I mean, given the fact that this has been what Jensen Huang has said, a $50 billion opportunity. They've actually put their forecast on sales in China to zero, basically, for several quarters now. So, given those comments that we heard with Ed Ludlow just a few days ago, post-Trump Xi, it'll be interesting to see what Nvidia has to say in the earnings call about those AI chip shipments to China and the prospects of that as well. But then again, right, at a time when the market is really questioning, are hyperscalers still willing to suspend aggressively, just given the fact that has been a concern among the market now? And once we see that sort of slowdown, what happens to the whole AI trade?
Yeah, we're still expecting pretty strong growth on data center revenue, though, to your point. And I think the numbers in terms of the estimates is for it to hit 88%. And this is coming at the time where it's, of course, fending off competition as far as AI accelerators are concerned, right? From the likes of AMD, Broadcom even, Alphabet, and these companies been finding new ways to capitalize on this massive spending that we've been seeing on compute. So that's something that, of course, investors are going to be watching. And as you say, the forecasts for Chinese markets and, when it comes to AI processes, the extent in which we'll see that moving the needle a little, Yvonne.
Yeah, I think key questions around the data center story, right, is how are the Blackwell systems doing, in terms of the ramp up there? Has it been strong? And what does it mean for the Rubin platform as well? Like, is there enough visibility around that sort of new sort of technology? So certainly there's a lot coming through here in these Nvidia earnings, not just when it comes to the headline numbers. And for subscribers, you can also turn to your terminal for more on those Nvidia results. T-Live Go is your function for the latest updates, plus commentary and analysis from our expert editors.
President Trump is threatening to resume strikes on Iran in the coming days as part of a push for a deal to end the war. The latest threat came after Trump said he had called off a planned attack after an appeal by Gulf allies.
They come to the table, they're begging to make a deal, because they're begging to make a deal. I hope we don't have to do the war, but we may have to give them another big hit. We may have to give them another big hit. I'm not sure yet. I had made the decision. So they called up, they had heard I made the decision. They said, sir, could you give us a couple of more days? Because we think they're being reasonable.
How long is it take for Iran to come to?
Well, I'm saying 2 or 3 days, maybe Friday, Saturday, Sunday, something, maybe early next week, a limited period of time.
And NATO is now said to be considering the possibility of helping ships pass through the Strait of Hormuz if the waterway is not reopened by early July. And that would represent a shift in the alliance's strategy on the conflict in the Middle East.
Yep. Meantime, the Russian President Vladimir Putin has arrived in Beijing, aiming to reinforce ties with Chinese leader Xi Jinping and make progress on the long-stalled energy project. Our chief North Asia correspondent, Stephen Angle, joins us now from Beijing. So, Steve, you were telling us yesterday about Power of Siberia 2. Have we learned anything about whether this is going to be on the agenda in terms of energy project considerations? Have we heard anything else from both sides?
Guys, I've lost your audio, but maybe you can still hear me. I'll talk about, I don't know what you asked me there, Avril, but basically what we're expecting from this summit between Xi Jinping and Vladimir Putin is obviously with the wars at the backdrop. I'm talking wars plural because of the war in Ukraine is going into its 5th year, and the war in Iran is obviously causing a lasting oil price and energy shock. So those are the backdrop of these discussions, no doubt. They have a very powerful relationship between Russia and China, but it's an unequal one. And obviously, 4 years of war in Ukraine is starting to show severe strain on the Russian economy. And of course, we know that the Russian oil exports to the European Union have been entirely cut off. So Vladimir Putin is here, coming down the steps onto the red carpet, another world leader coming to Beijing following, of course, Donald Trump last week. And then, of course, Keir Starmer was here and Mark Carney was here. We had Lee Jae-moon of South Korea was here. Friedrich Merz was here this year. The list goes on. Macron from France. So Vladimir Putin has different agenda, obviously. They want to show to the world this, alliance, this no limits partnership between Moscow and Beijing as a counterweight to the West. But Vladimir Putin needs to get, contracts signed for the Power of Siberia 2 pipeline that runs from central Russia, or it doesn't run yet. It's proposed. It's going to cost billions and billions of dollars, more than a decade to build. But Russia needs commitments, firm commitments, and length of commitments from the Chinese if they're going to build this pipeline from upper central Russia through Mongolia into China. And that's the big question right now. Is the war in Iran going to be the catalyst that Vladimir Putin takes to Xi Jinping today at the Great Hall of the People, then later today in their moments of tea ceremonies to talk about, look, the war in Iran has caused energy prices to soar. Now is the time to sign on the bottom line and get this deal done. And commitments, multi-year commitments to buy LNG from Russia through the Power of Siberia 2 pipeline. That's what we're all waiting for. No one's really expecting this to be finished today, but at least Vladimir Putin is hoping they can propel this forward.
Steve? Thanks for really dealing with all the technical gremlins there. Stephen Engel, our chief North Asia correspondent, joining us live from Beijing, talking a little bit more about that Xi-Putin meeting, his 25th visit to the country there. CSI 300 is lower by about 1/3 of 1%. We're flat on the Chinax. At least we've climbed back just a little bit, but HS Tech moderately lower here this morning. This is Bloomberg. We're going to go live now to the Sohn conference in Hong Kong, where you can see there ARK Investment Management CEO Cathie Wood speaking to our very own David Inglés on stage. Let's listen in.
Applied to hair loss. And that same target, we're beginning to understand, could be targeted to endometriosis. And we just had a conversation with Sean McLean and his science team, medical team this week, and I asked the question about fibromyalgia. One of my dear friends has that disease. It's very painful. It's also pretty much isolated to women, and he is saying that this candidate, this drug target, might also be applicable to fibromyalgia. So they've, after starting with alopecia, a hair loss disease, they're now finding these other applications, very interesting, that are all about women's health. And they're very excited because they are collapsing the cost and time because of their AI expertise to, first of all, discover these new drug targets and develop them. So very excited about Absci. And you're right, David. The market isn't appreciating. Recently, it got a little excited about the hair loss target. But I think because we're still in a risk-averse mode, everybody thinks we're in this AI hype cycle, And sure, there's been a lot of excitement about that. But think about the companies involved in the public markets. They're very cash rich. The hyperscalers, they have a lot of cash. So they're still getting a lot of respect. The companies that are in the trenches using AI to discover and develop new drugs, they are not appreciated yet, but they will be.
I know you guys disclose your trades, correct me if I'm wrong, every day. Hesai fell, I think, overnight 6%. Did you guys add to any positions overnight?
Well, our stocks, they rise and fall. Well, I know that we added it recently. I don't know what you're talking about, but we are very excited about
today,
that.
but yeah. Okay, well, I actually thought, Cathie, this would be our first conversation without talking about Nvidia, but you forced my hand by talking about hyperscalers there. And, I guess a background. So Cathie you guys made a lot of money in Nvidia. You guys were very high profile in exiting that trade years back. And the thesis was, Cathie, just for the audience, was if you believe that if the market was valuing a company like Nvidia that much, the love should spread to other parts of the market. The reason I frame it that way, do you think the market is underestimating the application side of AI these days and not so much the upstream names that have been very much in favor?
Yes. And we do own Nvidia. We didn't sell it throughout our portfolios. We did own it, but we do think that the largest revenue generating opportunity from AI in terms of embodied AI is going to be in transportation. So, we're very well known for Tesla, and we think Tesla and robotaxis are about to take off so that, many people who think of it as an EV company right now, populated or powered by human-driven cars, they're going to have to shift to autonomous mobility, which is going to be more of a subscription model. It's a platform company. It'll have software-like margins. Very different from today. We think that opportunity is going to be the biggest revenue upside surprise during the next 5 to 10 years. We know that the semiconductor companies are well understood in terms of their potential revenue generating opportunity. We don't think transportation or healthcare. The reason for this, we think healthcare is going to be the most profound application of AI. But I think a lot of traditional investors who are wedded to benchmarks are not venturing here yet, but they will, because there will be aha moments. There will be light bulbs going off as we see more and more publicity about AI helping to diagnose disease in very early stages, maybe even before traditional technology would see the symptoms, and AI curing disease, as well as collapsing the cost and time of drug discovery and development. Collapsing the cost by, we think it will be 75%, and the time by 40%. So, we think massive healthcare applications.
Cathie, we know it's getting late, so final question for you. When you guys come out with your key ideas around technology, you guys clearly look beyond the next 12 months from that point in time. Very few people even knew what large language models were, as an example, 3 years ago, let alone agentic AI. So my question for you is, how do you know you're right about these technologies that you put out at the start of the year? What degree of confidence do you think you have a better idea of what the world will look like in 3 years' time?
So there are two parts to that answer. One is every technology follows a learning curve. A learning curve we can analyze. And the way we analyze it is with Wright's law, a relative of Moore's law. Moore's law is a function of time, every 18 months to 2 years. Wright's law is a function of units, every cumulative doubling in the number of units produced. The way we know if we're going to be right, if there's no interruption in the unit growth and companies can exploit these technologies and ride down the cost curve, then we think they'll be adopted very quickly. Where we went wrong around COVID and its aftermath, we had no idea how long that supply shock would last. It lasted 3 years. That hurt the unit growth dynamic. So our biggest focus is on unit growth associated with these technologies. If something like a COVID crisis gets in the way, we need to take more note. If not, then we think we're going to see some spectacular growth rates from these new technologies.
Cathie, thank you so much for carving out part of your evening for us here in the Asia Pacific. We appreciate it. Cathie Wood there, ladies and gentlemen.
We're going to leave that there. For Bloomberg subscribers, you can continue watching at LiveGo of the Sohn conference here in Hong Kong. You'll also find big diary entries coming up today and later on this week, as well as some of the events you may have missed earlier.
Yep, let's also take a look at how some of these stocks are faring. Of course, among the movers, we're tracking how Citi's note on, the likes of Amir and how the results, raised guidance, provides a sort of positive read-through for sportswear makers, including Anta and Top Sports. Citi also talking about how for the telecoms business, if we can take a look at some of these telcos in China as well, they see the token rollout marking a sort of pivot. And maybe that brings in fresh revenue streams as well for the telcos. For the moment, though, you are seeing them mostly coming under pressure. It's not a great day today for stocks as far as risk assets are concerned, tracking more or less what you're seeing in the rest of the region. CSI 300, though, managing slight gains. You're watching The China Show. We'll have a lot more on the way in the next hour.
Welcome back to the China Show. Here's a look at the CSI 300 a half hour into the session. And, really interesting. You're starting it buck really the trend of what we're seeing across Asia Pacific here today. Asian stocks are actually down for a fourth straight day. Yields across the region are also picking up in the bond market as well. So we continue to see that this may not just be a rate story anymore. It is turning a little bit more across assets. And you're starting to see stocks feel that, Avril.
Yeah, take a look at how we're faring on the rest of the region, where it's mostly been negative territory for some of these risk-related assets. I think the Nikkei is on the fifth session of declines. The broader gauge is also in negative territory. We've been tracking some of these comments from Japanese officials, of course. The South Korean gauge is also sitting quite soft, though it's paired a lot of the declines from early on in the session. Choppy day, really. It's interesting, the gauge of Bloomberg semiconductor stocks in Asia is seeing slight gains now, and Chinese chip stocks are also rallying pretty hard. You're looking at dollar China meantime moving sideways, and of course, as you highlighted earlier, what we are watching in bonds with that 20-year auction in Japan out today. Let's take a look at how the yields are trending. The 30-year hit the highest level we've seen since 2007. Of course, also in markets is that pricing of the Fed rate hike, a full one priced in now before the year is through. We're looking at a bit of a firmness coming through on Japan's 10-year. Let's bring in now our Chief Asia FX and Rates correspondent, Ruth Carson, for more on what's happening in the bond market. So we saw that route. Then in the Asia session, the past 2 days, it's interesting, a bit of calm returns. I mean, what are you expecting on how bad this can get and what the driver of the sell-off is?
So duration. No one wants to touch it. An analogy that I'm hearing from trading desks is, do you really want to catch a falling knife at the moment. So even when there is headline to headline trading, is the war ending? Is the war not ending? Is there progress? Is there no progress? Pretty much your profits of buying the dip can be wiped out within a matter of seconds to minutes. So right now it is very much a bond bear market. Investors are worried about duration, especially when it comes to long bonds, as we've seen with 30-year yields in the US sort of hitting multi-decade highs. Is this going to continue? Right now, yes, until the Strait of Hormuz is probably open, or we have firm certainty that things are going to be ending with the war in Iran. It's a bear market.
What are you watching in Japan? We have that 20-year auction that's out later today, and 30-year already last week showed those signs of indigestion.
Yeah, absolutely. And we know that the stress is particularly acute in Japan. It is, a market that's not only sensitive to inflation. We know that Japan's a big importer when it comes to energy from the Middle East. There is that, verdict as well from investors saying that the BOJ is behind the curve when it comes to raising rates. So it's a very potent cocktail here for the bond bears out there. 20 years is a lot of duration for investors to stomach. We had a fantastic MLive post this morning that kind of sort of shadows how 30-year bonds, in particular in Japan, actually is still appealing to some life insurers. But 20-year is a funny one because it's sort of in between. So definitely keep an eye on it because it could be another signal that all's not well with bonds.
Yeah, JGBs is one market, Ruth. Are there any particular bond markets that you're looking at that stand out as possibly being more vulnerable to further sell-offs given all these inflation fears?
It's interesting that when the Iran war sort of started, the chatter in trading desk straight away was Asia, like sell Asia. It doesn't matter whether you're in Japan or in Korea or indeed in this part of the world, in Southeast Asia. We all know that Asian bond markets are particularly vulnerable to energy-driven inflation shocks because it is an importer of Middle East oil and other commodities. So absolutely, take your pick in this region. It is very much one that is under a lot of pressure and one we're keeping an eye on because it will impact central bank policy at some stage.
Ruth, thank you so much. Our Chief Asia FX and Rates Correspondent, Ruth Carson. Coming up, we come to you live from the sidelines of the Australian Energy Producers Forum in Adelaide, where we speak with Woodside Chief Executive Liz Westcott on energy security and her outlook for the sector. More ahead on The China Show. This is Bloomberg.
They come to the table, they're begging to make a deal, because they're begging to make a deal. I hope we don't have to do the war, but we may have to give them another big hit. We may have to give them another big hit. I'm not sure yet.
President Trump there threatening to resume strikes on Iran in the coming days. And with global energy supplies under pressure, the focus in Australia is now on boosting stockpiles. Now, industry leaders have told an energy producers conference there's an urgent need to increase natural gas production, warning of possible domestic shortfall later this decade. Let's go live now to that conference in Adelaide, where our very own Paul Allen is with our next guest, who runs, of course, Australia's largest LNG producer. Paul.
Thanks very much, Yvonne. Yes, I'm joined by Liz Westcott, the CEO of Woodside. Liz, thank you so much for your time today. I believe your first time with us on Bloomberg TV as well.
Well, it's a pleasure to be here. Thank you.
I wish the circumstances were easier for you also because, the conflict in Iran obviously generating a tremendous amount of geopolitical uncertainty. Can you give us a sense of how this is impacting your decision-making and your investment decisions?
Yeah, the crisis in the Middle East has absolutely reinforced the importance of energy supplies and in particular gas. In Australia, the federal government's been working very hard on ensuring we have sufficient supplies of liquid fuels and has publicly reinforced the benefit of having an LNG export industry as part of the ability to secure commitments from other countries. As an operator and as a producer, the importance on being reliable and honouring commitments is reinforced, and certainly customers are looking for us to honour our contracts and also, if there's any additional volumes, to keep them in mind.
Before any of this happened, a lot of the conversations were around the LNG market heading for a glut. Is this still the case if this conflict ends, or do you see Asian consumers still needing every molecule of gas that Australia can provide?
So LNG markets have always had volatility. They've had a lot of seasonality to them with demand high and low. We've also always survived and been part of geopolitical stability, price volatility. So to some degree the markets are well set for these events. We are seeing build out of new supply, and so that's going to continue to support the market going forward. But certainly our customers are very keen to continue to contract with us.
And are customers looking for longer duration contracts now, or has there been any change to that?
The immediate activity for customers has been securing short-term supply as a result of having so much supply held back from the Middle East. But customers have historically, since COVID really, since 2021, been moving more to longer term supply, and we are starting to see that behaviour continue. So nearly 2/3 of contracts since 2021 worldwide have been for more than 10 years, and so we continue to see that playing forward.
And of course we're seeing upheaval on the domestic front as well, following the budget, the announcement of a 20% gas reservation policy, potential changes to the petroleum resource rent tax coming as well. How are you planning around that?
So political stability is really important. Tax stability for industries like ours. We invest for decades and we have significant investments. We continue to talk with governments in Australia. The federal government, recently agreed not to change the tax settings as part of the budget, and we're in discussions with them on the new reservation policy that they recently talked to us about. The West Australian government, where the state government already has a domestic reservation policy that we use in Western Australia, and so it will be important that a federal system can work in harmony with what's already there in Western Australia.
How would you characterise the broader regulatory setup in Australia now? Is it getting too hard to invest in new LNG projects?
Woodside continues to be super proud to be an Australian company and has strong ambition to continue to invest here. We do need stable in government, we need stable fiscal settings, we need predictable settings, and we need timely approvals. But we have Browse as a fabulous opportunity. It's a discovered but yet undeveloped resource, and we're looking to see how do we bring that to market. We recently had an independent study that the Joint Venture commissioned that highlighted just the benefits that could bring to Australia. Domestic gas for households and businesses, support our regional partners, but deliver more than $56 billion in taxes and royalties, provide additional jobs, things the government is also looking for. So ensuring changes to policies that continue to support investment is going to be really important.
Yeah, let's talk a little bit more about Browse. I mean, when can we expect a final decision on this project?
Browse is a project that we're keen to continue to progress. We have contracting companies working with us now on early front-end engineering and design for the floating FPSOs offshore. We've been working commercial agreements with our counterparts, and we've continued to have long-term engagements with the government on environmental approvals. We need to have stable, predictable tax and fiscal settings as well, but we're optimistic of the progress of Browse.
Yeah, well, the caution and the steady pace is understandable because it's not cheap. Would you consider selling off infrastructure or any assets to help fund the project?
So we have a number of committed projects today as Woodside that we're busy supporting. We've got a Trion development in Mexico, and we've got our Louisiana LNG project in the US. We then have a suite of opportunities that could follow, and these projects will all need to compete for capital, and we need to consider the right strategic move for Woodside. We have Browse, we have further opportunities at Louisiana to do additional trains there. These are some of the considerations we have.
Where would you place the chances of this not going ahead, or is it just a question of when rather than if?
Browse has been part of the Woodside portfolio for decades, and the teams continue to progress it. The importance of having energy security in Australia has really been highlighted this year, and its ability to support energy security in our region is equally important. So we understand that Browse could really be a solution for Australia going forward.
Mm-hmm. Can you tell me a little bit more about M&A, because when we're in situations like this, we've got very high oil prices, very strong earnings, good balance sheets as well. You would feel that the scene is probably set for some consolidation. Are you looking at making any acquisitions at the moment?
Yeah, Woodside's portfolio has continued to use mergers, acquisitions, divestments as part of the tools to increase value for shareholders. And that's been part of the suite of things. So that's always something that we contemplate. But we'll be looking for material positions. We'd be looking for assets that complement our skills, our geographies that we already are, that really are able for Woodside to generate additional value for shareholders.
Well, back in 2024, Woodside and Santos were talking about a tie-up, and it eventually didn't proceed because of valuations. Is that something that could potentially become a reality again?
That particular deal is behind us.
Mm-hmm.
Yeah.
I see.
Yeah.
Now, when you became CEO, it came at a time where Woodside was advancing a number of important LNG projects. Is this still very much an LNG-first company?
Yeah, Woodside has a real strength in LNG operating capability. We've been an operator of LNG for more than 35 years, and so we have a suite of projects that are going to continue with that. But we are also a proud oil developer, and in particular deepwater oil, with our Sangomar asset that came online in 2024 and the Trion project now in Mexico. So they're complementary, but the portfolio will be a dominated LNG portfolio.
Do you feel Australia requires more oil refining capacity?
Important for Australia is to recognise the ability to have fuel security, and the government in their recent budget put money aside to ensure that we have sufficient reserves. So refining capacity is one opportunity, but I think having the ability to do trades with the Asian counterparts for whom this is their natural product is equally valid.
Yes, and in terms of that, Australia's unique leverage in terms of providing the gas that Asian consumers need in return for the liquid fuel that Australia needs.
Yeah.
How long do you see this arrangement being sustainable and durable for? Can it last as long as the Iran war lasts?
The arrangements are actually existing commitments between the countries, and what has been done is reinforce that we acknowledge that we actually need you to fully honour those commitments. And likewise, our counterparts, the Japanese Prime Minister visited Australia seeking confirmation that we would continue to honour the commitments of LNG export. So the onus and the responsibility for Australia is to continue to develop new resources to enable that security, that energy security between our counterparts to continue.
Mm-hmm. Can you imagine a situation, as was discussed in the early days of this conflict, where we might see some sort of rationing in Australia? Or are we past that now? Do you feel that fuel security is sufficient, that that's no longer a conversation?
I think that's an interesting question, and it's one that I know governments are really actively considering. Having gas and LNG available to support our Asian counterparts is our best opportunity to provide the reciprocal produced fuel back into Australia. And so that's the opportunity for Australia, I think, is to continue to have reciprocity in how we support our counterparts in the agreement that they will do the same for us.
Mm-hmm. You mentioned earlier that you are in conversation with the government around potential changes to the tax regime around the petroleum resource rent tax. The government's taken a lot of criticism post-budget for breaking promises around property tax. Does this make it difficult to go ahead with these conversations in good faith, thinking, the political climate could potentially change election to election?
We have worked with governments over decades, and so we work with governments continually. And so part of the opportunity, I guess, for companies is to work with governments as they evolve their thinking. We understand that the government chose not to do anything for tax, which we're grateful for in the budget, but we do expect this conversation to continue. It's a democracy in Australia. Conversations like this are important. We believe the current regime is more than adequate in providing that fair share of return to Australia, but the conversation will continue.
Just finally, Liz, is there one change, one policy change, one regulation that you would like to see happen that would make your life a lot easier?
As we discussed, our projects compete for capital with other opportunities that are outside of Australia. And one of the hallmarks of Australia has been having a stable, predictable, transparent tax fiscal system, having regulatory approvals that were enduring, timely. We need to return to having that as a key feature of investing in Australia, and that will give Australia the best chance.
All right, Liz Westcott, CEO and Managing Director of Woodside, thank you so much for joining us today.
Thank you very much.
All right, Avril.
Paul, thank you so much. Good stuff. We'll have more from Adelaide in the next hour when we speak to Australian energy producer CEO Samantha McCulloch. We'll watch that, of course, later on in shows. Yvonne?
Yep, and we've been tracking these live pictures out of Taiwan here this morning where the President Lai Ching-te is marking his second anniversary in office. He is commenting a little bit on, of course, what's been going on that came out from this Trump-Xi summit. And he says that Taiwan's future cannot be decided by external forces. This, of course, is we did see that with President Trump, where he mentioned that this U.S. arms purchases from Taiwan is some sort of bargaining chip here as well. The Taiwanese president has defended that statement, saying that these deals are the most important deterrent when it comes to regional conflict and instability. On the flip side of that, he's also announcing a few sort of, priorities for the second year in office. And he says, when it comes to this support for the industrial upgrade, they're talking about 100 billion Taiwanese dollars as well. Also talking when it comes to the energy crisis and the like, where Taiwan will practically consider all energy sources. When it comes to growth, obviously they've been benefiting from this AI boom. They're talking about the economy punching some 7% according to their forecast there. So a few news to kind of highlight here. But yes, when it comes to the side of Taiwan relations and cross-strait relations, he says, they cherish peace, but they will not give up on freedom. That is the latest here. We'll bring you more if we hear it. Keep it here on The China Show. This is Bloomberg.
Welcome back. Here are some of the major corporate stories we're following. Liv Golf is said to have started laying the groundwork for a potential U.S. bankruptcy filing if it fails to raise new funds. Sources say the league is currently looking for money after its main backer, the Saudi Public Investment Fund, pulled its funding. We're told Liv Golf is preparing for its potential collapse when the season ends in late August. Arsenal Football Club has won the English Premier League title for the first time in 22 years. Thousands of fans celebrated in the streets of North London as Manchester City's challenge ended with a draw in their game at Bournemouth. And Arsenal had finished runners-up in the past 3 seasons. They now face PSG in the final of the European Champions League on May 30th for the chance to secure another trophy. Bloomberg has learned that bankers are preparing to sell $49 billion of debt to fund the Paramount Skydance takeover of Warner Brothers Discovery. Paramount is seeking to use loans and bonds to refinance its existing short-term financing into longer-term debt. We're told the deal will include a mix of investment-grade secured bonds and junk debt. Samsung and Google are unveiling new smart glasses with a launch plan later this year. Built with Warby Parker and Gentle Monster, the devices let users interact with Gemini by voice. Features include directions, calls, translations, and camera-based queries. Pricing, timing, and privacy details are still to come. And China's top flash memory chipmaker Yangtze Memory Technologies has begun the process for an IPO, tapping booming AI-driven demand. YMTC says it has started a pre-listing tutoring process with local brokers, CITIC Securities and CSE Financial. YMTC joins Changxin Memory, seeking fresh capital to expand capacity and bolster Beijing's drive for tech self-sufficiency. Yvonne?
All right, Avril, we're checking when it comes to Chinese chip stocks here this morning and really bucking the trend across tech. When you take a look at what's been happening kind of quietly here, this rally, that's basically, we've seen some of these China chip ETFs have been up for about 3 days in a row now. So domestic chips seeing a bit of reversal here of late, and certainly that does help a little bit when it comes to some of these onshore markets. But you take a look at the broader, how Asia chips are doing, and maybe overall things are looking a little bit better, right? We talked about the Kospi turning positive here in the last few minutes as well. So tech is gaining a little bit more, I guess, after this pretty relentless sell-off we've seen. 2% gains for Samsung here. SK Hynix is also up by 1.5%. And Kioxia, the one in Tokyo there, is also up and recovering here today as well. When you take a look at when it comes to the Kospi intraday, it's interesting too, given what we saw with now that we turned positive. We talked about how Samsung might be lifting things up there, in particular, and SK Hynix, of course. And it's interesting too with this Bank of America fund managers survey that came out overnight. Now, I think it was more than a majority of some of these fund managers were still overweight stocks. Which really, to them, to the team, they're saying that is almost like a sell signal when it comes to, very frothy parts of this market. And I think chips is part of that, too. JGBs is doing this here right now. Of course, we have that 20-year auction coming up here later on today. So the demand picture is going to be interesting to see. Right now, we are seeing yields come off just a little bit here for the 20-year. We're at 375 levels, the 30-year at 412, Avril.
Yeah, the 20-year is a bit of an awkward duration, right? Why go there if you're looking at secondary markets on the super long end already giving you 4% yield? So, it could be a really tricky session in terms of the post-market after we get the results on these JGBs for the 20-year after what was already a really indigestion sort of scenario we saw on the 30-year auction just last week. We'll track that and more on the shows. This is Bloomberg. It's 11:29 a.m. in Tokyo. Japanese markets going to break in a minute. And when you look cross assets, I think this is pretty much the picture of the worries among investors on bonds, the concerns, especially on the long end. Inflation, is the BOJ behind the curve? You're looking at the need as well to keep the yen in its, check, so to speak, and you're looking at dollar yen just sitting under the 159 handle for the moment. Stocks are also against the backdrop of pretty much a down day, this midweek edition of the trading week. We are seeing those declines, although it's worth highlighting when you look across the region that the chip stocks in South Korea managed to reverse some of those declines, and Chinese chip stocks have also been rallying pretty hard. And of course, this is a time where perhaps risk appetite is seeing a bit of recalibration given what we're seeing in yields along with the dollar, Yvonne.
Yeah, and as we start to track, right, where this treasury sell-off is, particularly in the long end, you start to see when it comes to traders what they're pricing in, and they're still adjusting here, about Fed rate hikes, right? I think just a few days ago, the pricing was around March 2027. I think they pushed that a bit forward now, and it's a near 100% chance of a Fed hike by January of next year. So here to talk a little bit more about inflation dynamics and the like, let's bring in Alexis Crow, partner and chief economist at PwC US. Alexis, it's always great to have you here in the region. We talk about long end treasury yields are now breaking into new highs and all that. These inflation fears are really coming out in a big way. How concerned are you?
Well, thank you. I think really, Yvonne, first of all, it's wonderful to be back with you here. And markets are right to be concerned about the rate of inflation related to the energy price shock. And so what's happening in advanced economies where we've seen yields, of course, on the 30-year note in the U.S. hit almost a 20-year high, Japan on the 40-year note, record high, is that those are two countries with record levels of government debt. And so in the advanced economy world, you've got record piles of government debt where governments have really acted on a fiscal impulse to step in and shield consumers and companies from these price-related shocks that we've had related to COVID, going back to Russia's invasion of Ukraine. And of course, what we've seen is governments really willing to step in and shield consumers on that price increase. In the case of Japan, we actually saw inflation data come down in March because of the extent of the fiscal largesse of the government to be able to step in.
And I guess when you start to see more of this financial strain, should we expect further upside in yields then? I mean, do you see that, what we're seeing as inflation expectations, are they taking hold now, you think?
Well, it's so interesting, right? When we still look at Fed data in the U.S., inflation expectations remain well anchored for the long run. They've only been rising significantly on the short end. And so I think when you start to look at central bankers, what we're watching in terms of statements are, monitoring every minute is the extent to which consumers and companies will start to bake this in. I would say that,
Are we seeing demand destruction yet, though, from it?
Well, it's interesting. One energy executive recently said what we're seeing is demand rationing, which is just in response to the calibration of a shortage of supply. So we will come into the summer driving season in the Northern Hemisphere, which is typically skewed toward higher oil demand. We are coming into the summer cooling season in the Middle East, which will be skewed toward more nat gas demand as well as oil demand. And so as we come into the season, demand will just pick up.
Yeah.
And so I think you've seen many energy executives are actually concerned at what price will demand just somehow collapse.
Alexis, do you think investors have to get used to an era of persistently higher yields overall, though?
Well, it's interesting. We haven't seen that really be a sticky feature of global capital markets. So when these yields have come up, what we've actually seen is some fickle capital coming into, for example, U.S. notes or Japanese notes, or even in the U.K. for its own country-specific reasons, because of the yields, right? So just that fickle flow of capital will come in. We saw that in October 2023 when the yield on the U.S. 10-year hit 5%. You saw a rush out of real estate and into fixed income assets. And so what I think you'll see is, on the one hand, retail investors saying, hey, I like these yields. I'm still willing to lend to Japan and the United States. On the, I would say, the more patient capital and sticky capital end, you'll probably see a rotation into real estate, infrastructure, other real assets, because these are deemed to be a hedge against inflation. And so I think we're going to see those two levers starting to emerge.
What about when it comes to, the market's preoccupation with AI and AI-related investments? How do you weave that into the investment thesis?
In the United States, as we know, that is the single engine that's really driving growth in the United States just on GDP level. The percentage of GDP that we're seeing in the tech investment space, be it in software, be it in hardware. There's a new development there, of course, with data centers in contrast with previous technology booms. So that really is the single engine that's driving growth. And of course, the wealth effect from the Mag 7, record number of households invested in the U.S. And so many are focused on this as being insulated from any kind of policy shifts. Of course, you haven't really seen hard credit conditions. Credit conditions have been pretty easeful that have precipitated a lot of this lending. So, of course, with the prospect of a hike on the table by the Fed toward the end of the year, I think many will be concerned.
You mentioned about the reaction functions of central banks. I don't think rate hikes are going to revive energy flows in the Strait of Hormuz anytime soon. Do you think rate hikes are the appropriate sort of response to all this?
Well, it's interesting because you had Christine Lagarde in the ECB actually saying that cautioning governments that their response on the fiscal side needed to be tailored, targeted, and temporary, because if you stoke demand too much at a high price environment, you will need to come in with hikes. So I think that's certainly one concern. I would say on the other side, what people don't talk about, we talk about inflation, but we don't talk about asset price inflation.
Yeah.
And if you had a scenario, which we did in Europe, where central banks were easing, if you had the same situation in India, now all of a sudden you have to reverse course. You have to think about what's going to happen to asset prices with that sudden shift. So I think that's something that's probably underpriced by investors.
It's interesting also because I think in China, you almost see a bit of a reverse of that so-called wealth effect, right? What is your, strongest conviction when it comes to what this means for the Chinese economy?
Well, thanks so much, Avril. So when we look at the Chinese consumer, I would say the Chinese consumer is, of course, becoming much more selective. And you see that with some of the investments of European luxury companies in the way that they're catering toward the consumer. But you just have a drastically, as you highlight the wealth effect, we have just a drastically different situation in mainland China than we do in the United States. So there is a culture of fiscal rectitude by households that's just embedded in the Chinese society. You have a household savings rate of 36%, it's hovered there, whereas you have 3.6% in the United States. So it's just a very different level. So when you look at the policy lens of trying to shift GDP growth away from exports and toward consumption, there's just probably going to be a glass ceiling as to how far that will actually go. The other thing to point out, of course, is just the composition of household assets in terms of wealth that would underpin that wealth effect. So in the United States, that's overwhelmingly skewed toward financial assets and 401ks. Of course, in China and other advanced economies looking to Europe as well, that's skewed more toward real assets and particularly residential property. And so, of course, where we've been in the property market, that will just continue to create a structural drag on that effect. The other thing to think about just in terms of growth is that Shanghai Composite Index was one of the best performing financial markets last year. So the extent to which households will be more invested in financial assets can create a little bit more of an uplift.
Yes, and you mentioned about this rebalancing of the economy that we haven't quite seen just yet. And you said there's a glass ceiling. And the focus is on advanced manufacturing right now and then building this whole resilience in China's supply chains. Can that be the pillar of growth for China here to offset what's happening domestically, especially what you're seeing with this whole AI boom and really AI-related exports to the rest of the world?
Well, it's interesting, Yvonne, because I know we've talked over the years the extent to which China really is an aggregator of regional trade surpluses, right? So if you think about Korea and Japan, other countries sending inputs to China that then go into whatever kind of a smartphone or whatever kind of a laptop, and China really excels at that as no other country does in the world. What we've started to see recently is there's been an evident prowess of China's ability to diversify its exports away from the United States, which again is very sensitive to that AI boom, and more toward intra-Asian trade, more toward European countries. One of the things that I think is important just in the wake of this conflict with Iran is the extent to which other countries are becoming ever more interdependent with China. So Japanese companies for the first time starting to import polystyrene, naphtha from China. You're seeing this on the clean tech side, where again, China excels in clean tech and accelerating the BEV scenario for different countries. And you're actually seeing this, of course, in even currency swaps, which have hit that 2-year high.
Alexis, I wish we had more time, but thanks so much for joining us here during your trip to Asia. Alexis Crow there, partner and chief economist at PwC US. Avril, you have some news on Samsung.
Yep. Breaking news crossing the terminal. Yonhap reporting that the Samsung union, will go on strike tomorrow, and this is as planned. And it sounds like that talks with the labor union between that and management have sort of broken down. So this is really raising those concerns about where this leaves Samsung in terms of the supply of chips and the push towards building the next generation of semiconductors. Of course, this is something that's left the markets on tenterhooks for the past week or so. So a lot of the reaction might have already been priced into the chip stock. We are seeing, though, that turn back down on the Kospi against this backdrop. Maybe also a bit of a read-through when it comes to the Korean won, because it has paired some of those earlier reversals. And of course, this is coming at a time where there's been this two-speed economy that's emerged in South Korea. And it's really the crux of this on how that gains from AI can be sort of redistributed. You're seeing, of course, this is a pillar for the South Korean economy. And those considerations, I guess, playing out across assets in markets in South Korea for the moment. Yvonne?
Yeah, it's interesting to see the whipsaw we're seeing across the Kospi now. We were talking about how it was just moments ago reversed some of the losses, and now it's Samsung that has dragged this Kospi now to continue to slide here today. I'm looking at the MLI blog, and Mark Cranfield says that this could look like a last-minute bargaining chip and doesn't confirm there will be a strike. So maybe it's not quite confirmed yet, but if there is, Mark said it will get ugly for Samsung, for the Kospi, as switching chip making back online is not as simple as flipping a switch. So yes, the production concerns, given the fact that we already see bottlenecks in this market, is going to be continuing to weigh on investors' minds here as we once again, wait for some sort of clarity here on really if there really is going to be a strike tomorrow. This could be pretty interesting for your Thursday. In the meantime, we're watching, of course, other moves across these markets, and EMFX certainly is front and center. The rupiah, we're checking that here ahead of this BI decision, where it looks to be live and a rate hike could be in play, according to some investors out there here, just given, of course, what we have seen with the rupiah plummeting to new lows. The central bank needs to act in some way. Now, that global bond sell-off is also putting pressure on Asia's most vulnerable economies, forcing central banks to tighten even as the Iran oil shock hits growth. Let's bring in our Asia-Pacific economic reporter, Swati Pandey. She joins us with more on this story. Tell us a bit more about the Asia impact from this global bond rout and which countries are looking a bit more vulnerable now.
So, Yvonne, what happened is we've seen a big global bond sell-off, which has sent U.S. Treasury yields to the highest level since 2007. And what that has done is made investments in emerging Asia less attractive. And as a result, people are moving money out of Asia to those countries like the U.S. And as a result, the currencies in emerging markets have been on a free fall. Largely, this has all been driven by the war in Iran and the energy price shock. The countries that are the most vulnerable are Philippines, which is a huge oil importer, Indonesia, which is seeing a free fall in its rupiah, and India, which is the worst performing currency. The Indian rupee is the worst performing currency in Asia this year so far.
Yeah, Swati, we've been seeing already these EMFX. They've been coming under pressure even before the most recent bond rout we've been seeing in the past week or so. What are the implications for the bond ructions for these countries specifically?
Yes, we have been seeing these countries have been under pressure. Having said that, the macroeconomic outlook was not so bad for Indonesia and India. In particular, before the war started, their growth and inflation outlook were quite benign for that matter. So this is coming, this shock has come at not a very good time for them. And the policy implications largely is that today we will see Bank Indonesia probably raise interest rates. There are also talks that they will announce some sort of commodity export controls today. The announcement would come from the government. They have already announced increasing long-term bond buybacks. This is all from Indonesia. India is largely doing currency interventions at the moment and has announced some administrative changes such as higher import taxes for gold and silver, and there are some other trade restrictions. There are some chatter in the market, and there was a report from Citibank about potential capital control, which would be huge if it happens. India has so far not said anything directly about capital controls. It is a bit of a sensitive issue because it does hurt investor sentiment if it happens. But given how dire the situation is, there could be further actions from these countries.
Swati, thank you. Swati Pandey there, our Asia-Pacific economy reporter. Just want to get back to our breaking news now when it came to Samsung. So we're getting a little bit more clarity now. The Samsung union speaking and says it will go on a general strike as planned for tomorrow. So you are seeing when it comes to Samsung shares, there you go, dramatic sort of drop here, and it really is bringing down the Kospi here, resuming its decline. This is what the union had told reporters, that the union remains willing, though, to engage in talks during this strike, But what came out of that another round of negotiations was that Samsung management rejected the mediation proposal. So what was discussed was the union demanding that basically Samsung scrap an existing bonus cap and really allocating that 15% of its operating profit to worker bonuses and formalize those terms in employment contracts, as of course the company benefits from this whole AI boom. So once again, we continue to see here that it looks like it's confirmed that Samsung, that union will go on strike tomorrow, obviously leading to some disruption concerns across this market here today. We'll have plenty more ahead on what this means for the global technology supply chain. This is Bloomberg.
So the story this hour, as we've been bringing you the latest, has really been how the talks between Samsung's largest labor union and management have broken down. Local media reporting, of course, earlier that the strike will go on. And we've also since, I think, gotten some confirmation and clarity from the labor union of how this strike will indeed transpire. The concerns here really are how it might affect chip production at the time where AI investments have really been front and center. And of course, tomorrow, if the strike goes on as planned, it'll be interesting to see the read-through from earnings as it'll coincide with what we see in Asian markets post Nvidia. Of course, now you are seeing the Kospi, which at one point in the session managed to reverse clock-like gains. You're looking at it just around those session lows for the moment. Of course, the other big thing that we've been tracking has been the Russian president visiting Beijing, and he's since arrived and aiming to reinforce ties with the Chinese side. Let's get to our colleague who's been tracking all this, of course, our chief North Asia correspondent, Stephen Engel, joins us from Beijing. So, Stephen, you've been telling us about what to expect in terms of Power of Siberia 2. Is there anything that we should be watching out for that we've learned in the past day or so from either side?
Well, I think the fact that he's bringing quite a large entourage with him, I think it's 8 ministers, 5 deputy prime ministers, the central bank governor, and heads of large corporations. We understand the heads of Gazprom will be here as well. Of course, Vladimir Putin would like to see the ball moved forward down the field on the Power of Siberia 2 gas pipeline that would, it's been long proposed, and I think last year the two nations came to, in concept, agreement, right? Now they're kind of stuck on the negotiations for the length of contract and the commitment from China on how much gas that they will actually buy from Russia through that Power of Siberia 2 pipeline. But again, the Chinese want the best deal possible, right? So I guess the leverage that Vladimir Putin now has is the war in Iran has driven up oil prices, and essentially most nations are looking for energy resilience. So maybe he's going to be playing that card on the table. But keep in mind as well, the Chinese have their leverage as well, because this is a powerful relationship, sort of a counterweight to the influence of the West. But this is pretty much a one-way relationship right now. They're discussing pipeline, but let's face it, China is pretty much a large lifeline to the Russian economy. And after 4 years of war in Ukraine, the economy in Russia is feeling the strain. So there could be a number of different commercial deals announced with all those business leaders and ministers going to be here with Vladimir Putin in the Great Hall of the People today.
Yeah, energy remains really the backbone of this relationship, really, Steve, as you highlighted. That was our chief North Asia correspondent, Stephen Engel, joining us out of Beijing. You're looking at those live pictures outside the Great Hall of the People here, where you see the military waiting to greet the Russian President Vladimir Putin just moments away, just days, of course, President Trump stepping foot there as well. We have plenty more ahead. This is Bloomberg. We're continuing to follow the breaking news out of Samsung here this morning. And according to local media, we are getting the Samsung perspective of all this and why we saw these negotiations break down. According to the company, they said it was the union's excessive demands to undermine the principles. So that continues to show that the two sides are still quite far apart. And from the union head, and what he told reporters in the last couple of moments is that this strike will go on as planned starting tomorrow. But they are still remains willing to engage in those talks during that strike. But then again, there's going to be a lot of implications for global supply chains out there and really the potential disruptions if this strike goes on for some time. We'll bring you back to those live pictures out of Beijing, outside the Great Hall of the People, where we are expecting the Russian President Vladimir Putin to arrive there and to meet with the Chinese President Xi Jinping here just days, of course, as President Xi was at that very spot and shaking hands with President Trump. Of course, a lot is on the line when it comes to this bilateral trade relationship, which, in Beijing's perspective has been largely transactional, but energy, that gas pipeline of the Power Siberia 2, very much going to be on the agenda today. Plenty more to come from Insight with Hesai and Amin.